Good morning to all traders and welcome to another daily markets watch provided to you by Omega FX. Stavros Tisiousi. It is the 2nd of December today and markets continue to plummet as the first case of Omicron has been detected in the US. And at this very short-lived moment yesterday where markets started recovering, well, volatility increased massively, of course, and we saw a very sharp reversal on NASDAQ, equities in general, risk in general, including taking natural gas to fresh multi-week lows, as well as the Aussie against the dollar. So today's session, we're going to start with the NASDAQ. We're going to have a look on Aussie dollar. Where is it? And what's ahead of us, and also NASDAQ. Now, natural gas, excuse me. Now, NASDAQ has actually held quite well if we compare to S&P, and Dow Jones technology stocks are doing quite well, okay? Now, of course, that doesn't mean there's no more room to the downside, okay? It's confirmed by the MACD and the RSI, okay? We are looking at the 4-hour. Both gave us a very amazing signal up here, and we started moving lower. And that looks that there is progress moving down, okay? There is progress. So the next level would be that top at 1572 or so, okay? This is a very important level because the moment we re-enter this territory, the room all the way down to 1438 opens up, okay? Obviously in between we do have levels, but the moment we do tap that level, okay, it means that there is appetite for re-entering that territory, okay? And once we enter that territory, it means there is more appetite to even go and test that low down here. So we can be looking at something that could be detrimental for, no, it wouldn't just be NASDAQ, but currently we analyze the prices of NASDAQ over here. So I want you to see how this trend line has held prices moving higher with bounces, first, second, third. Now, we're probably looking for a potential bounce once again, okay? That would be, of course, more of a medium term, short to medium term thing rather in the short term. What we do see in the short term, okay, and it's very obvious to everyone, at least I hope, is that we do have a massive head and shoulders here, okay? And as you can understand, we've just broken, at least initially, the neckline, okay? Actually, the best way to do this would be to use a channel so that we get an accurate trend line for the channel. Let's see. It's pretty flat, to be honest, but either way, it's what it is, and this is where we are currently. So I will be looking, because if someone tells you that head and shoulders is a reversal pattern, it's not correct. This is not a reversal pattern. Head and shoulders is, well, it depends on where it appears, but it's usually a continuation pattern, okay? So that means that we can expect prices to correct lower. Usually the 62 is a very good level for a correction, which is around 1529. And from there, we can start looking for opportunities to, to a potential move to the upside for a continuation. But until then, I think we'll remain bearish. And it's very likely to go and test the 1571. Now, when and how, that's, of course, a whole different story. But we can go closer and go even quickly down on the 1-hour chart, see where we are, what we can expect, and what could help us validate or invalidate a certain move. Now, over here, we see some sideways market, which is considered to be a correction. And then after that, we see a move to the downside. That looks quite big, right? Now, that indicates that there is progress to the downside, okay? So with this being done over here, and this now start correcting, we need to really pay attention and focus on that level over here, which is the 1606. This is a level that we might see bulls or the markets going to retest. In case we do move higher, that might also coincide with a different level. Let's see, where are we? And look at this. So it comes exactly at 38% Fibonacci. Yeah. It is a previous swing low and very important level because otherwise it will invalidate there is progress to the downside. Plus, it's around resistance level at 1600s. Okay, so very important level in my opinion. Can we get there? Maybe we won't even get there because it is important to look at what the RSI and MACD is telling us. And right now, they don't show that there is any sort of appetite for more upside. Okay, we've just, however, gotten out of an oversold territory here. And the MACD, it's turning flat, which means there is potential for more upside from that perspective, okay? But we don't see a strong signal, like a divergence. So we have to be a little bit, take this potential short-term upside with a pinch of salt. But more downside, in my opinion, it's a higher probability as we speak. And the next level to look, although of course one would be the 1572 or so, would also, well, look at this, coincide with the 100 Fibonacci extension of that leg to the downside. Now, in case we do break 1569, 1557 is the next level, then 1539, which is the 138 Fibonacci expansion. But once we do the 1529, we might also do the 1520. In case we do 1520, guys, this is the issue here. That opens up interpretation room, which means that might be a third wave coming down, which means there might be more impulsive progress to the downside. Okay, but if we do miss 1520, then this would be very likely considered as a potential level, to start considering a potential bounce, for a continuation to the upside. Let's see where Aussie has fallen. Aussie has fallen to let's go here, third of the 11. The 11 of the third. Is this correct? What is this? We are looking at the daily, right? Yeah. So multi-month low, like 8 months low over here for the Aussie. Yeah. Let me tell you this. From down here all the way up, we have just bounced at the 38%, which is the 70-60 around level. But I want you to see something else, that we also are looking potentially at a head and shoulders, which, by the way, has just broken out of the lower channel. This is a bit more up of an upside move, and it's not as detrimental for now, at least, because NASDAQ has done, actually it is the same, but in the smaller scale here. We're looking at the hour, and we're here at 38. So the RSI and the MACD, do they show us something? Do know that 6460 is possible here, right? Now let's look quickly at this. The RSI and the MACD have shown us a signal up here, okay, which by the way was the top of this channel, okay. And since then we started moving lower down, following that signal over here. Now we do see some divergence, okay? Here and here prices are lower, the RSI lower, RSI higher, MACD lower, MACD higher, okay? So what does this tell us? That there is room, much better than NASDAQ, to move a little bit higher, but it's going to be corrective, and it will remain corrective as long as we stay below 72.74. Yeah, so we need to see if there is an attempt at the upside. We need to see prices stopping at 72.74. Otherwise, there is chances that continues higher. Okay, if we do hold that level, if there is an upside, I repeat, then that is likely to head towards the 50, which is at 67.60, and then the 62, which is at 64.60. Obviously, in between, there's going to be other levels. And as always, we're going to identify those. So we did a similar, we use similar methodology for the NASDAQ. So let's do the same over here. We'll go from top to bottom and then all the way up to where we've corrected. And let's look at the daily again, because it's pretty hard to determine what's going on here. Look at this. The 62% is at 69.84, and the 100% of this correction is at 66.37, which is the next level after the 50. Okay, obviously it's not guaranteed we're going to get there, but it's likely to get there, because so far we are seeing, well, we are seeing some sort of progress to the downside. Okay. Well, excluding these, there might be some very small touch between these levels here, but you know, it doesn't necessarily mean much. Okay, there is still progress to the downside, at least internal, because we're looking at the daily here. So I want to go quickly on the 1 hour to see if we find anything to show us a hint for potential upside. Well, signal and signal over here, RSI MACD, we did that move to the upside up to 71.75, a very good level. We have done a triple top now here. Okay, so here's what we want. We want to get back above the 71.17. If that happens, then the likelihood to go the way up to 71.71 is going to increase, right? We do get a bullish hidden divergence here on the RSI and the MACD as well. But the way it looks like it's moving now, this is probably progressive to the downside. So we might see another leg down to around 71, 70, 85, maybe even retest the 71 again, which is a very big psychological level. And from that, start moving higher, okay? But we really need to get through 71.70 for this potential signal to take place. And don't forget, it's unlikely that it's going to get past 71.74 without seeing momentum and volumes increasing right at this triple top, because it is a triple top and a very important level going forward. Natural gas, we talked about the bearish divergence here for a while. I am not mistaken, probably 2 weeks ago. And what is going on right now is we see a correction. We see this correction continuing, and we have had an amazing rally in natural gas. Obviously, we went up to like 650 or so, 642, and now we are down at 420. A huge move. Regardless, it looks progressive to the upside, which means now any move to the downside is to be considered as a correction up until we get to 30.26. And if we get there, up until that level or down until that level, this is remaining biased to the upside and looks progressive to the upside. Obviously, we're going to use our Fibos here. 38 is broken, it's done and dusted. So 50 is the next level. Yeah, we want to see that level hold for any potential of a short-term rally, even for brief relief, if that makes sense. Now, the RSI and the MACD both show us that there is a very good hidden divergence here, bullish, okay? And we would also prefer to stay above that level, of course, right? Otherwise, if we do get down here, this is going to invalidate these two signals that we get on the RSI and the MACD, and very likely to get down to 326 from 373. Now we're at 426, okay? And that looks progressive. It does not look anything like there is, this is going to stop anytime soon. But we look at the signals and we see potential short-term rally. The level we need to pay attention to at the top over here is the 464. If we tag that level or get past it, that will reduce the chances of moving lower down. But as long as we remain below 464, that is poised to, go and reach the 392 and the 373 as well. Okay, so does this cluster up with any other levels? Let's have a quick look. Well, over here, you see the 100 Fibonacci expansion comes exactly at 373. This is a cluster, and that is probably the next level that we need to take into account. And perhaps that is a good level. No? Well, it's a bit far, yes. It would be a good level. Maybe that is a good trend line level here. That is a bit off as well. Well, then we delete that. It's okay. We have to test sometimes what's going on, okay? Maybe this would work. A channel here. Actually, that would be around that level here. Actually, the first wave is here. So it's where we are right now. Okay, it's where we stopped and where we're bouncing, and potentially we might get an upside for the short term if the 1 hour confirms something. What does the 1 hour show? The 1 hour show that there is some sort of divergence here. There's flattening of the momentum of the MACD. The RSI was oversold and now it's actually back into usual territories, normal territories. So potential for upside, is it good in the very short term? Yes. In the very short term, I repeat, where to? That is the where to. We'll look at 23 and 38. And look at this, the 38 comes exactly at 464, which is that swing low. Okay, potential for upside. Once we break 443, 464, and that will be probably done, and then continue lower down, as long, of course, that this level is not penetrated. In the shorter term, look at 430. So that will be all for the day. Thank you very much for watching this video once again, and we'll be here again with you tomorrow for another daily markets watch. Take care and trade safe.